I'm
No issues, no issues. Yeah. Hello, everyone. A very warm welcome to our webinar today on what is leading to record new historic low tariffs in solar in India. The event is organized jointly by Institute of Energy Economics and Financial Analysis, that is IEEFA and JMK Research. IEEFA is a leading think tank that analyzes issues related to energy markets, trends, and policies. JMK Research is a boutique research and consulting firm that focuses on three key segments: renewables, electric mobility, and battery storage. Quickly on the format of the webinar. The webinar will consist of interactive discussion with our eminent speakers. We will be able to take up the question and answer session towards the end from the attendees. Participants are welcome to submit their questions in the chat box or Q&A box at the bottom of the webinar window. So when we planned this event, actually, we had decided what led to historic low of 2 rupees. But in the last 2 days itself, we have seen that we have got another new historic low of 1.99. So we have to see where this number is going to end. So with that backdrop in mind, I think it's very interesting. It will be a very interesting discussion today, and we'll want to get few, possible reasons that are leading to such low tariffs. And what could be the underlying risk with such aggressive tariffs, impact analysis on, if any, on earlier auction tenders, where we all know that SECI is struggling to sign PSAs. And then lastly, the developer's perspective on future tariff trends. And to take the discussions today, we have truly a very diverse set of people with us today from the industry. We have with us Ms. Vibhuti Garg, Energy Economist from IEEFA. From the developer side, we have two people with us, Mr. Goutam Samanta from Juniper Green and Mr. Lakshmi Narayanan from Ayana Renewable. Both are actively participating in these aggressive tenders as well. From the EPC side, we have Mr. Sathish Velu from L&T. And last but not the least, Mr. Mudit Jain, who's head of research Tata Cleantech, and he will be telling us more on the risk appetite with such tariffs and such projects. Very warm welcome to all the panelists. Thank you so much for taking time out today and to be part of this discussion. Without taking much time, we would like to start with you, Vibhuti, first. What is your take or views on this trend on such record low tariffs, Vibhuti? Over to you.
Thanks, Jyoti. A very good afternoon, everyone. Thank you for joining us today. The year 2020, I would say, has been a very landmark year in a lot many ways. So in the energy sector, we have seen some very positive developments, like there has been a significant global shift away of capital from thermal, coal and coal-fired power generation. At IEEFA, we have been tracking this, and around 152 globally significant banks, insurers, asset owners, they have implemented substantial formal coal policies since the year 2013. But this year itself, we have seen some 68 new or updated policy statements. In the renewable energy sector, we have seen record low solar tariff this year. When the SECI 1070 megawatt tender results were announced in November 2020, we wanted to understand the drivers for this low tariff. So, we, along with JMK Research, spoke with few industry stakeholders to understand what led to such low tariff. We came out with a briefing note and then decided to organize this webinar, basically to deliberate about, these new record low solar tariffs and whether these tariffs are sustainable. And just 2 days before today's event, as Jyoti was mentioning, we have now a new record low tariff of rupees 1.99 per kilowatt hour. The tariff looks promising and sustainable, but we'll hear more from the experts who have joined us today to share their views, on the recent bids, results, and how they see this market evolving. Before I begin, quickly about IEEFA. IEEFA is a global finance think tank working to promote energy transition by looking at the nexus of energy, finance, and climate. The overall purpose of the work is to strategically conduct and disseminate financial analysis relating to transition to renewable energy through research, outreach, collaboration, dialogue, as well as media. I will now quickly present some data to set the context. Next slide. Thank you. This slide basically shows, how discovered solar tariffs of some of the projects which are amongst the lowest in the world and which are priced below the cost of fossil fuel generation. So in the last few years, we have seen Gulf region achieving one of the lowest tariff, which are in the range of US cent 1.35 to 1.8 per kilowatt hour. In August 2020, we saw another record low tariff in Portugal, which was around US cent 1.32 per kilowatt hour for a bid of 700 megawatt of solar energy auction. India's tariffs are also among some of the lowest in the world and are in the range of US cent 2.7 to 3.56 per kilowatt hour. In June 2020, we saw lowest price of US cent 3.14 per kilowatt hour, which is the 2.36 rupees per kilowatt hour bid, which now has further reduced to US cent 2.7 per kilowatt hour, which is the 1.99 bid, which we have just seen 2 days ago. Next slide. Solar tariffs are deflationary. The prices have come down by approximately 75% just in a span of 7 years. With the introduction of competitive bidding in 2016, there was a drop in prices by approximately 35% from the last bid. In December 2020, prices declined further, I would say by 16% from the earlier lowest tariff of rupees 2.36 per unit. Next slide. If you look at the range of lowest winning tariff and the tariffs bid by all developers in the same tender, since 2019, most of these newly auctioned solar projects saw tariffs in the range of rupees 2.5 to 2.87 per kilowatt hour till first quarter of 2020. The bids prior to February 2020 had ceiling tariffs, but MNRE removed this ceiling in February 2020 for all new solar and wind tenders. So from quarter 2 of this year, prices are now hovering in the range of the new record low of 1.99 rupees to 2.97 per kilowatt hour. So the lowest value in these tenders we are seeing have gone down substantially. While there are some developers who see a lot of risk and are bidding still, in the range of 2.5 to 2.97, as I said earlier. Next slide. On 30th June 2020, SECI's 2 gigawatt solar tender under interstate transmission system auction set the previous lowest winning tariff of rupees 2.36 per kilowatt hour. The SECI auction on 23rd November 2020 saw another lowest tariff yet of rupees 2 per kilowatt hour. The tariff-based bidding was conducted for the selection of solar power developers up to 1,070 megawatt of grid-connected solar PV projects, on build or own operate basis in Rajasthan. In this bid, with 14 developers participated, and the tender was oversubscribed. Saudi Arabia-based Algemoya Energy and Water Company and Singapore-based Sembcorp Energy, which is the Indian Green Infra Wind Energy Limited, were the L1 bidders with a tariff of rupees 2 per kilowatt hour for 200 megawatt and 400 megawatt respectively. State-owned NTPC also won the contract for the remaining 470 megawatt, as it quoted one of the other lowest second bid, which was around 2.01 rupees per kilowatt hour. This is the first SECI tender, where the majority of capacity, 600 megawatt, was won by foreign developers. Well, the story of low tariff doesn't end here. Next slide. So just 2 days ago, Gujarat Urja Vikas Limited, GUVNL, auction for 500 megawatt of solar projects, has set a new record. In this auction, the lowest tariff reached was rupees 1.99 per kilowatt hour. This tariff is a paisa less than SECI's previous record low tariff. The L1 bidders are NTPC with capacity of 200 megawatt, Torrent Power with 100 megawatt, Moya Energy and Water Company again with 80 megawatt, and Aditya Renewables for 120 megawatt. The tender has been oversubscribed by 1940 megawatt. Next slide. I think while we have seen these low tariffs, based on our discussion with various stakeholders to understand what actually drove these prices to such low levels. So some of the factors that we have identified were true for the SECI bid, but to a large extent also holds true for the Gujarat bid as well. So one of the big reasons which we identified for the SECI bid was power purchase assurance, which for the SECI bid, because given the PCA, the PSA, the power sale agreement between the intermediary procurer SECI and RUVNL was signed. So that gave a lot of confidence to the developers, and that is why they didn't factor in the risk of the signing of PPAs with the distribution companies. So to some extent, they were quite assured, and as a result, they did bid such low tariffs. Similarly, in the case of Gujarat, GUVNL would be the off-taker. So again, there is an assurance there. Secondly, land acquisition, which is considered as one of the major risks by developers. In these two tenders, the risk is kind of again minimized as the state will facilitate acquisition of land. Another reason was access to low-cost financing by international-based developers, especially the Saudi Arabia developer Al Jamoya and Singapore, the SEMCOP, had access to low-cost financing, as well as NTPC can also is in a position to secure debt at the rate of 7.5%. So that gives them, again, ability to access finance and bid low tariff. Another reason was on the exemption of duties. So if the safeguard duties are not extended beyond July 2021, then it is possible that the SGD will not be applicable for procurement of modules for these projects. So given that the timeline was 18 months, so it is likely that most of these developers will procure modules after July 2021. BCD is now, the government has come out that it will implement BCD from April 2022. So again, these projects are exempted, but even if it was introduced before, most likely they would have got a pass through, under the change in law. Lastly, I would say the prospect of installation of bifacial modules and single axis trackers. So with improvement in technology, these modules and these trackers would help to produce more, or the generation will go up, and that also helps developers in reducing their levelized cost of energy. Further, there is expectation that fall in module prices will happen even more because there has been a surge in production, especially in China. So these are some of the factors that we have identified for such low tariffs. I won't waste any more time in giving our analysis, but will want industry experts who are behind such low tariffs share their side of the story. So over to you, Jyoti.
Thanks, Vibhuti, for setting up the context. I think you have touched based upon all the key reasons behind this tariff. But now let's quickly hear it from our expert panelists here. We would like to start with the developers first. Mr. Goutam, what is leading to such aggression, and possibly could be the reason for sudden surge in interest from the developers now? And I will ask the same question to you as well, Lakshmi, next. So, Mr. Goutam, over to you first.
Okay. Good morning to all, and good afternoon, everybody. This is a million-dollar question, you know. In such a low tariff, you have to match it. Yes, so I'll give my answers in the things like in the SWOT analysis, you know, strength, weakness, opportunity, and the threat. You know? So the strength is that, you know, if you look into the last 10 years, you know, and the Indian developers' point of view, 2010 to 2020, you know, we have crossed the learning curve, and we have done a lot of engineering, and we know how to get the best design of the power plant and the best generations of that, you know. The next strength is that, you know, the monopark with the P monopark and a P type, you know, which is very, very stable in the market. And it's not only that, you know, we had seen recently that the higher wattage modules, you know, substrate size from the G1, 158.75, has been running through to M6, 166 by 166, and then going forward 182 by 122, which is M10, and then M12 is 210 by 210. So with that one is a higher wattage modules, you know, higher wattage modules means 600 plus, you know, and as this, you know, power plant is going to come after 2021, I mean, mid of 2021, maybe end of 21. So there is enough time, you know. We have another things we have witnessed, you know, this is possible with the single axis tracker. The thing is that if we look into the LCOE formula, something like the capex plus the OPEX operating cost divided by the generations, to get a better generations, you know, one wants to have, you know, the higher wattage, the modules, you know. But how do you get this higher? If you look at the parameter, technical parameters on the higher wattage modules, you know, there is a low temperature coefficient, you know, which is 0.35, because the beading side, and I mean obviously the area, you know, is a higher radiations, therefore the higher generations, and the temperatures is a big concern over there, you know, because its operating temperature is you know, about 45 degrees Celsius. Therefore, the temperature coefficient will play a big role over there, you know, right? On the single axis trackers, you know, we had witnessed, I mean, India, in almost all the developers are in a pilot mode, and they have seen the generations, you know, at least 25% more than the fixed tilt with the monofacial wafers, you know, right? With modules, in fact, you know. So there are a lot of the positive points, you know. I mean, if we look at the weakness side, you know, the weakness means, as you see, though there is a lot of installation, very few installations in terms of the single axis trackers, but in a mass productions, because one of the factors that we have technical reason is the albedo. Albedo is in the backside reflections which is coming, you know. So these albedo factors, you know, where there is a sand or any kind of a, you know, instead of a grass, the grass we don't get a good albedo. So the albedo factor is taken to the account. The other thing is that, you know, you have to install a slightly on a higher height, you know, compared to the fixed tilt to get this structure. But there are a lot of other things like, you know, which is called the wind tunneling effect that we have to take into the account. So therefore, you know, tonnage per megawatt is slightly higher compared to the fixed tilt in a single axis tracker, like, you know, 45 ton and so, you know. Opportunity, I will say, you know, because opportunity in a sense, like as the BCD is coming in by 1st April 2022, you know, so some developers, you know, if they are we're getting late, you know, in China, what will happens, you know, as the BCD will coming, the 40% of the module, they'll try to match these numbers. In that case, what will happen, you know, the module price is going to fall, maybe, you know, something like 17 to 80 cents. So what the developers have initially calculated the IRR, say for example, to 5 to 6%, you know, now that will be getting an advantage of maybe 9 to 10% on the IRR, you know, and the capex will be reduced. And on the threat sides, you know, in a sense, like if the bifacial modules with the single axis trackers, you know, is not going to deal with that. I mean, the expected generations, what we have expected. Say, I'll give an example of that. On a fixed tilt, in these higher radiation regions, we get something like 1675 the units. If we compare vis-a-vis with the bifacial modules, we get something like 2150 the units. So it's a very at least 27% more than the fixed tilt configuration. But in the two cases, if we look into the monofacial module and the bifacial, the advantage is that the bifacial modules, the with the compared to the fixed tilts, and the fixed tilts, that degradations, I mean, with the backsheet is a 0.55%. So if we take into the accounts like for the 25 years, so the module degradations is something like almost the 15%, vis-a-vis the glass modules is 12.8%, because per year degradations first year is 2% and the subsequent year is 0.45%. So what I'll say, with the kind of generations and with the capex, something like the fixed tilt is around 2.7 crore versus with the tracker something like the 3.05 crores. So it is possible that there is a delta with the type of the capex and with the investment. I mean, compared to the fixed tilt versus with the bifacial, with the single axis tracker, I think it is possible to match these numbers down to the line after 15 months to 18 months time. Thank you.
Thank you, Mr. Goutam. I think this is a very interesting thing. Even Vibhuti has mentioned it, that with the use of technology, you can obviously increase the generation. But let's take a lender perspective. Mudit, we would want to know from you that yes, everybody is talking about bifacial technologies with single axis tracker, but are lenders comfortable to fund such projects?
It's not a problem to fund bifacial or tracker per se, right? I'll take a different perspective here. I mean, as the saying goes, you have a 20/20 vision in hindsight. So as we use the same kind of concepts to justify the rise in share prices, and the moment it falls, we use similar kind of a reasoning to say these are the reasons for the share price, but no one knows the future. Now here are the things. When the tariff hit 435 or 436 by Senate recent tender, we have seen that the tariffs have fallen by close to 50%, but the proportionate reduction in the EPC prices were close to 30% only. That is more to do with the increasing risk appetite of the developers. A similar thing, if you just take a year back, the tariffs, the tenders were getting undersubscribed. The tariffs were over 2.6 and 2.7. The fundamentals were not too different. The bifacial technology was available even 2.5 years back from today. The single axis tracker is available even from the older times. All the reasoning which we are talking about today has been in effect for, I mean, I would say for slightly longer duration. Then we cannot just justify only for these two tenders alone. Just slight a step back, I would just say that the basic reason why the tariffs are falling are twofold. One is the module price reduction, and second is the interest cost reduction. The module price reduction has been a factor which has always been in play for a significant period of time, because the forward-looking price curve is always taken into account. What has really changed this time is the interest cost reduction. Everything else has been on a gradual development curve. For, I mean, if you want to look at the trend, you can justify it by looking at the back trend for past 4-5 years. The module price have been falling, and most of the times developers have been proven right. Of course, 25% of the time they would have suffered losses, but on an overall basis, they would have been proven right because of the falling cost curve. What really has changed is only the interest cost. Now, I was looking at the Vibhuti's presentation. I've actually gone through a report as well. I would just highlight there are 5 key factors which are basically risk parameter here. I'll just start with first the module price. The module price is one thing where we are anyways talking about the future. Let's not comment on it. The second thing is about the generation. The standard rules today are about 50% overloading. Now we have the projects in our portfolio, and we are not seeing it crossing 19% even in Rajasthan. With increasing overloading factor, you have higher clipping losses. Unless you increase your AC power capacity, by let's say 5 to 10%, as RERC has given in their latest filing. If they are allowing the inverters to supply more, then we could see higher generation. But if those kind of things are not taken into account, touching 19% with clipping losses could be little difficult. Having said that, I'm not accounting for the increased generation because of some uses of the technology. Having said that, that too will have to be factored not in the peak time, but during the course of the day after the clipping losses are taken into consideration. The second main parameter, which I think most of the people are missing out, is on the exchange rate part. Now, I have seen the numbers from most of the developers, and the rupee currency depreciation which they have been considering has been on the conservative side from today's level. Today we have appreciated with respect to dollar if you look at the past 6 months window. But then the volatility in the dollar prices has remained significantly high in the period preceding to that. We cannot just discount that particular concept going forward as well, and that could play an important role if the rupee depreciates by more than 2 or 3% than the expectations. That could have an impact of more than 1% of the project cost itself. Coming on to the third parameter, that is on the insurance cost. Globally, insurance cost on solar is rising because of the climate related issues coming together. Now here, the insurance cost, which I believe most of my panel members would be able to comment on it, but the insurance cost is rising in India. It's bound to happen that we are going to touch the rates which US is currently offering. In that scenario, the cost projections which we are talking about today may not hold going forward. About the interest rate, okay, I will not talk about the degradation much because we have the concepts that 0.5% could be a stable factor, and then the PID losses and the other things which you have been dealing with in the past have been addressed, but only time will tell how right we are. The fifth factor and the most risky one, which I presume, is the interest rate part. Now, if you would allow me, shall I just share the screen for a bit on the base rate design? May I?
Sure, Mudit.
So just a small bit about the repo rate. Currently, is my screen in full screen mode? Okay. Jyoti,
Yes.
can you confirm?
Yeah, it's
Mudit.
Yes.
So,
Yes,
look,
it is.
basically our repo rate has never been consistent, right? It depends upon the market situation. We have touched 4%. Having said that, we have never been there in the past 15 years. The rate have fluctuated from highs to lows. It has seen that. Although we have touched 4.75, but only briefly, only for 3 months period. Now this is a situation. What is the expectation going forward? Today, as Vibhuti, I was seeing in your report, the interest rate is close to 7.5%. Now here is the situation. If you expect the interest rate to remain low, can you take a call for next 10 to 15 years? That is a slightly difficult call to take because the inflation in India is rising. Government today wants the interest rate to be low because they want to propel in the growth mode post COVID-19 situation. Having said that, there is increasing pressure on the rupee as well as the inflation on RBI's head, and it will be very difficult for them to even keep this rate consistent for some time to come. And if you look at the sensitivity parameters, it's the interest rate which has the maximum impact when it comes to the cost scenario. Even a 50 basis point impact on a project which has all the cost on an upfront basis just throws the total numbers on board. And if our interest rates touches once again at 9.5% to 10%, our equity IRR would fall to the numbers which is lower than that of the interest cost, and that would be little difficult number to justify if we go forward by expecting the similar kind of interest rate. Now this is where I was telling you about the numbers, and taking a call on generation, taking a call on technology is not difficult, but taking a call on interest rate, because people are assuming a fixed rate contract which will not be available in the market today. NTPC is a different giant altogether. They are already in the process of diversifying. They are already in the process of realizing the green finance coming into India, and they will be able to capture, let's say, 6.5% kind of an interest rate for a longer duration. But for private companies, it would be slightly difficult, and the floating rate regime would take over. And that would be a scenario which will be little difficult if we take a future looking curve. Having said that, back to you. That's just my views.
Absolutely bang on, Mudit. I mean, all the points are very valid that you have raised. And Lakshmi, I will put you in a tricky spot, but at the end, let's hear from EPC players as well, what they have to say. Sathish, we have heard what Mr. Goutam has said, what Mudit has presented. I think everything is making sense. So from an EPC perspective, we want to know, is there any scope in the costing side, O&M or BOS cost or anything? What is your take basically on these aggressive tariffs? Do you think these are feasible?
Satish, you are on mute.
Am I audible now?
Yes, Sathish, you are.
Yeah, thank you. I think Vibhuti has largely covered the aspects of why the tariff is so low. And I think all of us agree to that point. First, before we understand how the EPC contributes to the tariff, so the tariff has got 6 major components. Okay, so it is ultimately the outcome of the input cost. And if you see the equity and then the debt portion, it contributes to almost 45% of the tariff. If it is 2 rupees, then it contributes to almost like 90 paisa. And then the module, which contributes to again 30%, and then the balance O&M contributes to 5%, viewers contributes to 15%, and then the land and then the evacuation thing contributes to hardly 8 to 10%. So if you see the viewers role is very minimum, and most of this module equity debt lies with the developer. And as Mudit was explaining, so interest rates were low, and then the debt portion has given us the advantage of reducing it from 2.5, which was there for like quite some time, and then it dropped to 2.36, and people are trying to break the head for 2.36, and it got reached 2. So the interest rates have come down, so it has brought down the tariff a little bit. And the equity portion, I'll come at the end for it. And then module part. So module part, obviously, if you see in June, so which is again having a 2.5 rupees tariff. From there, if you travel to December, so there was like higher watt peak module coming into the picture. And then because of which the logistics cost have also come down, because the number of modules transporting in a container has come down. And then overall, the module prices have also come down, but currently not the scenario. But going forward, if you pitch in for a somewhere in mid of 2022, then people believe the module prices would be reasonably at a rate that they were forecasted. And so that higher watt peak module has reduced the BOS cost to a large extent, up to at least till 540 watt peak. But beyond 540 watt peak, if you ask me, so if it is like again 600 watt peak, so that's why Gujarat has stayed at that tariff, same tariff. So that's not the case. The 600 watt peak module, the module dimensions are changing, so the benefit is very little. So it's not the exponential which you got it from 400 watt peak to 500 watt peak. It does not remain the same. So that is the case with the BOS. And O&M, obviously, earlier there was a transition happening in last 2 years from the wet cleaning concept to the dry cleaning concept. And then people were reluctant to switch to the dry cleaning concept, because their time they were not very confident of the robotic cleaning system and other things. Now it has been like more stabilized, and then people are very accustomed to the usage of the robotic cleaning system. So that brought down the soiling loss, which is again a factor to your generation. And again, the overall O&M cost is also reduced, because the major portion of your O&M cost is the cleaning cost. So both the labor and the water charges have come down. And if you see, so these are the technical part to it. And to address quickly on the bifacial, at least on a APC perspective and based on our analysis, currently it is at par. It is at par with the mono fixed tilt, I would say, bifacial tracker. But industry is pushing hard because the tracker has got lost in between. So it is like after 2016, so you hardly find any tracker installation. So people are not focusing on the optimization of tracker, but now there is a thrust, and then industry is pushing towards the optimization of tracker. And once it reaches a certain level, so then it would be an attractive solution. So currently it is at par, so people are considering it, bifacial tracker. And the last part is, so I'll come back to the equity thing. So equity, it is the return expectation. Obviously, it has the 20, 25, 28% contribution to the tariff. And obviously, any developer would look for a higher return expectation. But here, if you see the, as per our analysis, or like as per our understanding from the market, is that so people have lowered down their return expectations. So that is mainly because one is the PPA assurance, which Vibhuti was quoting in her presentation. PPA assurance is like SECI, as once you are tied up with SECI, then it is firm. But SECI is also finding some challenges in signing the PPA for the past 3-4 ISTS tenders. And now, but at least here, this Rajasthan and Gujarat has got a firm off-taker, Rajasthan and the Gujarat Discom. And also, it is like the more the capital available with the offtake of the investor or the developer, it is a cost to him. So he has to invest it quickly. So if it is like SECI is issuing LOI and then it is taking 6 months, 7 months time, so then it is the capital is not used anywhere and it is a cost to him. So then that has been one of the reasons for reducing the return expectation. So there is like quick takeoff of the project. And another one, if you see, there is also currently grid connect, the ISTS waivers and other things are available for a limited period of time. So once this project gets commissioned on time, so maybe before that period it should get commissioned on time. Otherwise, then there is contingencies, other things are to be loaded. So that is again led to the aggression of the bidders, and then you see a huge participation. And then also the BCD and then the anti-dumping duties, so how much is going to come. So there is a lot of speculation, like 30-40%. So then that's going to have a huge impact on tariffs. So then in that case, and now discoms would purchase this power, so there would be delay in signing the PPAs further. So that way, people have reduced their return expectation just to win in this tariff, so that all the things are on line. Thank you.
Thank you, Sathish. I think I have a lot of specific questions to you, but I will come back on that later on.
Sure.
Let me ask Lakshmi now. So Lakshmi, everyone is saying there are so many risks. Developers have reduced their return expectation. What is leading to such aggression, and how comes, tenders are oversubscribing by, almost 120, 140% now?
Okay. So I think to answer your question, see, I think a lot of people are putting their points, and I think nothing much more to agree with them. Yeah, right now, the biggest thing that an investor looks, in general, I would say largely looking at global investor landscape. When it comes to solar, there is a lot of gung-ho, compared to any other, be it thermal, be it wind. Generally, solar has a lot of traction for any kind of PEs because of its uncertainty in cash flows, simple technology, and all that. So that's the underlying framework for any per se solar is. Now, in terms of why the traction towards, or probably the subscription rates have increased, I think people have clearly pointed it out. It is that the certainty towards PPA getting signed. I mean, one thing which I saw in Vibhuti and totally surprised me was, I don't know if, then we have something we have missed completely, is that there's been assurance for land, which I don't think it is being provided. Vibhuti, if in case I'm wrong, just please correct me, because there was no assurance from any of the discoms that they will be providing the land to the winners. So, I mean, if that is there, please tell me myself, I'll have to correct it then. So, and other aspects is, look, I think, I think Vibhuti's presentation was, that if you look at the developers who have won versus who have not even moved their needle, it's people who are actually in the current market volatility. So I think, yeah, we have seen historically module prices falling, and I think I could not agree with Mudit that it's all a crystal box, right? I mean, I think today, crystal ball, sorry. Probably today, yes, I am predicting that it could fall to X percentage of what today, but nobody can give it to you in writing that, yes, this is how it is going to, the trend is going to follow. It's all a forward curve. People have mathematics to predict it, but at the end of the day, I mean, it's again a crystal ball for everyone. Now, looking at the current scenario where the module prices are, I mean, there has been wafer price increases on account of supply restrictions at China, several reasons, flooding, environmental related issues, And then we also have seen that the glass price is increasing because of shortage in supply. Then if I think if anybody has been tracking the Shanghai Container Index, Freight Index, it has jumped to historical highs, I would say 3x of what it was in the last 5 or 6 years average. So currently people who are procuring modules in the market for their projects would certainly not blindly go for a forward curve and say that, look, this is how the modules are going to fall, because we are on challenging times where the module volatility is very, very high. But one could also look at from this aspect is that once you move to bifacial, right, the glass requirement comes down. So probably the impact of glass prices or any movement is going to come down. Then, the glass capacity addition will see a strong increase in the coming quarters around the globe. And in fact, China is going to have a significant capacity added on. Then we have Longi and other tier one players putting in a lot of capacity addition. So there will be a pressure on silicon prices, wafers, and this thing due to oversupply. So one could look at counteracting balances to what today is, but certainly people who are riding the, swimming against the wave of today's module volatility will not certainly try to take that call. So that's why you see, I think, if you take the tariff slide of Vibhuti and see, there would be one set of developers on the one side and there is other set of developers on the other side of the spectrum. And the clear distinction is these winners don't have any projects per se being implemented with the current module prices. So that's where one of the difference. The next thing is, I think one other aspect is, industry has been long battling on, the non-recourse financing for these kind of projects. And especially for the likes of us, we generally look at non-recourse financing. So the moment when somebody is talking about non-recourse financing, things get a lot tougher. But if you look at winners, they are certainly, I might be wrong. I'm certainly not quoting that, or I don't have a certainty, but one could simply analyze and say that it's all going to be balance sheet funded. Once you look at balance sheet funded, I think Mr. Mudit Jain's track curve and other things would certainly fall in place. Certainly looking at NTPC, right? They have raised long-term rupee bonds at, less than 7% interest rates. And I think even the US Treasury rates have locked in. The ECBs and the green bond markets are quite bullish on India and even China. So the moment you try and go there with the current US Treasury rate bonds, with even if you try to put in a risk coupon, hedging coupon, and then the swap cost to it and everything you put together, you would be, at the lowest interest point today. But somebody looking at a domestic financing for these projects would certainly fall under the category of what Mr. Mudit was pointing out, right? One could not certainly take a call on long-term interest rates sustaining at these levels. It will be floating, and we are also seeing that the inflation rates are inching up. So certainly, and there will be places where the interest rates will rise and probably take the project for a toss. But yeah, so what one could see is people are looking at ECB financing and not domestic financing for two reasons. One is we are short of liquidity. If you currently look at the token size of all these projects, one could certainly not going to go for domestic financing. There are only few lenders with such big appetite, and these lenders will also want to backstop it through some other lending arrangement. And currently, the market is not ready for those things. So people would certainly look at ECB financing, I would say, and is one of the key differentiator. The domestic lending market and its maturity is something which we have to see. But the tariffs, impact of these tariffs are certainly because of those factors. Now, the other factors is generally, any infrastructure project per se, the non-fund based investments or probably the non-fund project cost is generally funded by developers, which adds, I would say, not a significant cost, but yes, when you're talking about 2 rupees and 2 rupee 199, certainly there is a difference. People starting to think of funding even these non-fund based through, guarantees from the whole course or guarantees from, their funds, which makes a significant difference to, when you're competing with somebody from a 2 rupees to 199 or a 198, 197, whatever that number is. Every other paisa people are trying to optimize. Generally, the way infrastructure works is these things are kept at the back of at your backseat. Whenever you feel that things are going wrong, you tend to take those and try to ensure that the projects are back on track. But I think now there is given the competition intensity, there is no room for such, cushions to be kept. So people try and pull out everything as possible. They want to arm themselves with everything to go on and win the project, right? And I think the key differentiator factor on the technology, I mean, I think I could not agree more with Mr. Goutam. Right now, yes, we are talking about bifacial with trackers, or probably, even a bifacial with a fixed tilt. They are certainly, I think, at the end of the day, one could look at it from a different perspective, right? If it's not going to offer you the lowest LCOE, why you wouldn't adopt to such a technology? The market will not be there for such a technology, and the production will not be there. So the adoption of technology is purely based on a mindset that it's going to be cost competitive. It's going to offer, reduction in tariffs, and ultimately it benefits the complete ecosystem. So I think, yeah, I mean, I would say, we are all talking today. I mean, Mr. Mudit clearly pointed out, right? At the end of the day, we are talking about future. Nobody knows whether, people have got it right or wrong, but yeah, time will tell whether they are right or wrong. But the fortunate aspect of being in this industry is that it has always, or probably the highest probability is that the developer has survived and he has made decent returns. It's not that the industry has been let down. Let's hope for the best. I think it's good for India as well that we are starting to see low tariffs despite our interest rates being high compared to the Western regions, or probably even the Middle East, where the financing is completely a different dynamics altogether. But I think this is a good trend, and I think that this trend will continue given the fact that the discoms are not going to accept anything higher going forward. Nevertheless, you could blame it on a lot of these aspects like the current interest rates, or probably module prices, whatever volatility we talk about. Now the discoms have caught an eye. I mean, these tariffs have caught the eyes of the discom, and certainly they're not going to agree to come back and say that, look, I mean, I'm happy. I mean, I'm ready to give you a high tariff. That's not going to certainly happen. So tariffs are certainly going to fall, but the trajectory is something quite difficult to fall. Probably it might stabilize for some time at the states, and probably there will be a fall. So I think people are more interested to know what is the project and equity around these things. These are sustainable project areas, but depends on what assumptions you make, what is your forward call on things. And on the hedging and other things, as Mudit pointed out, right? See, developers are aware of these risks. Earlier, it was purely a forward contracts which developers used to take. At least I'm talking about the ones which are Tier 1, series, and other things. People have moved to, I would say most complex structures, and even hedging your currencies and all that. So I think Mudit Jain would be probably seeing his term. I mean, people coming up with such kind of arrangements and other things. It comes with its own risk. But yes, people are willing to take those extra risks. But again, you have to know your country where you're investing, right? And you need to have a perspective about it. You can't be totally negative about a country, but still want to invest and make returns. So you should have a forward call, but with certain backings, and decent enough to at least make a sense out of it. Once you have all these in place, I think you can make these things work out.
Thank you, Lakshmi. You just mentioned the reasonable returns. Can I ask a direct question? What is the reasonable returns?
Sorry, I'm not allowed to answer. I mean, right. I think anybody in this forum will not. No, see, I think I would say that some of these developers might, at least in TPC, would like to have a normal treasury plus a risk coupon to it. But certainly not the other developers, because take Aljumai, SimCorp, they are not restricted to any subcontinent or any particular business avenues. At least Aljumai to say they have a variety of business segments. So why do invest in this particular segment and make subnormal returns? See, it could be that they could make a market entry, but at the end of the day, they should also understand that they are setting up a probably a barrier, and certainly they are not going to achieve in the future something more. So certainly they would be completely aware. I think the management would be completely aware of what they are doing, unless I don't think that they are missing something. I don't think a conglomerate of such nature would try and do something like this.
Right, Lakshmi. Mudit, I have one question for you now. So clearly, I think if we see the last GOVNL tender, it's not just government-backed entities and the international developers. We have seen player like Aditya Birla as well, who has quoted tariff of 1.99. So clearly, I think apart from financing, cost and technology are two important factors which people are relying on, or I think they are betting on, I would say. Do you agree to this? What is your take on this?
That's what I was saying. I mean, financing cost is one big reason why the tariffs have fallen. Now, regarding the acceptability of the same, Lakshmi has put out really good pointers about what people are considering on that forward curve basis. Now, just let's take a step back on the, let's say, guaranteed PPA point. I mean, I actually don't understand why would someone lower their return expectation just because there is a valid PPA arrangement. There is a hurdle rate to it, be what may it be. I mean, you do not lower that hurdle rate because you have your LPs backing you. You also have to give returns to your own investors. You cannot just come down on that front because there is certainty of PPA. That particular part is being there. I would say here the call is more on the forward looking basis. What would be my generation expectation? Generation by, I also mean that there will not be or congestion, 100% would be off take and everything. All of that would come into account, and then the interest rate forward curve would continue. It could come from balance sheet support. It could come from non-fund based lending arrangements. It could come from short. I mean, there are multiple kind of methods which people use. For example, the short-term funding could be used in the short run to boost up your equity IRR, and then use it to issue the bonds on a long-term basis later on, and then hope that it would be subscribed. You will not be hanging at a juncture. Having said that, these are the situations where it is now going on. It's not as if Aditya Birla do not have the capability to raise low-cost finance given their balance sheet size. But the idea is that where were they 8 to 10 months back when the tenders were getting undersubscribed at the rate of 2.6 and 2.7? The biggest cost you have is only the bank guarantees which you're given for signing your EMDs, not even PBGs, because the PSAs are not. So I really don't see any other reason except for these two.
Right, Mudit. I think taking cue from you, let me ask Sathish one thing. As a EPC player, Sathish, what is a typical generation guarantee that EPC players usually take, and do you think these tariffs will fall under that purview?
Generation guarantee. Talking of generation guarantee, nowadays it is, if you see overall, the module is in the scope of developers, and then there are very few projects where the EPCs get the modules, and then in the overall, if you see, there is a 19-20% or whatever is the loss. So majorly 10% comes from 10 or like more than 10% comes from the module. So we are hardly left with the DC loss, DC side cable loss, AC side cable loss, and the inverter loss and IDT loss. And then obviously now with the module sizes getting bigger, and then with the area, the ground coverage ratio coming down, so then it becomes less, like 1.5% has become like 1%, even the DC side, and that's how it has come down. But overall, if you see integrated, and then the module side, again the monofacial has come with a competitive numbers like 0.55% loss, and even the bifacial is now with 0.45 and 0.5 market is offering, and so that way the generation is boosting up. Otherwise, if you see, there is no major value addition which has happened in the last 2 years apart from these factors.
Okay, thank you, Sathish. Mr. Goutam, again taking the cue from what Sathish has mentioned, Mr. Goutam, you have shared that typically there is a 27%, I think, increase in generation with the bifacial module. So I think if we take like a 19% CUF, it should come to around 24% CUF with the bifacial with tracker modules that are there. So Mr. Goutam, are we right on these numbers? I think is this typically the trend for a bifacial with tracker modules the generation is?
Yes, actually with the bifacial generations, what I have mentioned is, yes, the CUF has to be slightly increased than your the monofacial, something like 28% is possible. That's what we have already calculated. Right. So as I mentioned, like in the monofacial side, there are couple of things we take into the already it has told, like on the DC side the loading is more on a single axis trackers the loading is maybe 16 to 70%, right? But with the use of the trackers, yes, it is possible to achieve those numbers. But obviously not in all areas, as I told you, a little bit on the you look in the albedo factors. Something like that. Yes, it is possible.
All right, Mr. Goutam, thank you for that. And I think Vibhuti, maybe now you can take over. We have some very interesting questions from the attendees today. So let's pick up few questions from the session itself. Vibhuti, maybe you would like to coordinate the Q&A session now.
Sure. So thanks to all the panelists for sharing insights. And responding to firstly, Mr. Lakshmi, your observation on land acquisition. I don't know, I got this feedback from speaking to another developer. I could be very wrong. Thanks for pointing that out. So if that's not the case, then I think that's a big risk. And if that I'm surprised, then we still have achieved such low tariff. If that risk is still there and, developers will have to go ahead and do the land acquisition by itself. So good to see such low tariff despite this risk being still there. There have been a lot of very interesting questions. So while some of them have already been answered during the course of, deliberation, so I'm going to leave few of them, but coming to some specific ones. So Mudit, there has been one question for you, which is that, do you see insurance coverage coming into play on the currency risk if developers are conservative? So this is one. Sorry.
Look, Vibhuti, the insurance is available even today. It's just that the cost doesn't justify, because if you want to take an interest rate call for the insurance basis, it's just similar to taking a swap. So the cost is not too much different. And the swaps today are not available for 10 or 15 years. Usually people take the swap for 3 years because that is where the cost is getting optimized. Now the idea here is that for that currency, if you're taking a swap for module, if you're taking, let's say, 1 year swap, for your interest, if you're taking a 3-year swap, then the cost would be something which has to be justified. And given the low tariffs, it would be difficult for justifying the insurance cost or the swap for the 15-year basis.
All right, good to know that. There was another question where, that Azure Power, I don't know if that's right or not, is assuming 30% PLF. Is that even possible? And are they also assuming 50% overloading? Is that correct?
Are you asking me?
Yeah. Or anybody?
I don't know what Azure Power is assuming, but
exactly.
If they are assuming 30% of it, 50% overloading, that it would come to 20% on a DC basis. Now, as I think Goutam would be the right guy to answer it. If with Goutam, over to you, I suppose.
Yeah, 50% loading is possible, but what will happen? Achieving I think 30% on that, it will be a very tough job. I'd say it's not. I think that number has not proven from the record. Theoretically it is possible, but it's very difficult to achieve that one. To be very frank, because the kind of though there is a system. Sathish has already told that the dry cleaning and people are trying to do every alternate day with the robotics cleaning. It's fine, but compared to earlier with the wet cleaning and with the frequency of 10 days, but that numbers is very, very difficult to achieve. So far it has not achieved in the industry. It's very tough.
Absolutely.
So Vibhuti, just to give you the perspective, this will be a number which at least we as a lender will not be comfortable to take on a complete non-recourse basis without, and let's say EPC wrap guarantee or an O&M contract which is backing such numbers. It would be very difficult to take such a call on a naked basis.
I think it's always essential that we set reasonable expectation and not such high, and then get lending for these projects, which, you know, we won't be able to achieve such overloading or such high generation. So point well taken. Mr. Goutam, again, just to highlight, I mean, we have seen such wide range in tariffs in these tender. So while some developers have been able to bid low, but, you know, there are other players as well who have not. I mean, what are the different risks they would have factor that led to such high tariff, or what is the reason for such divergence between the lowest tariff and the highest tariff in the same tender? Maybe you can cite some specific tender and share your insights on what could be the reasons why.
I think what Lakshmi and Sathish has already told, and also Mudit, you know, so there are a lot of factors taken into account. Is that the equity and the debt ratio, you know, right? So we know, I mean, there are a lot of developers, you know, even they are ready to go with not like 25% equity, maybe, you know, above 50% equity. And second thing is that low interest rate, you know, I mean, nobody now is thinking like, you know, you take a loan from the Indian, the bankers, and where you're paying something like 10% interest, you know, everybody is working in between 3 to 4%, you know, with the foreign, the lenders or the loan. The other factors, you know, I mean, we know some of the developers who are very quiet, you know, in this bidding, but they are now thinking, you know, I mean, this is an opportunity before coming into the BCD, you know, I mean, do grab some, you know, I'll say, you know, power plant or whatever the bidding, you know, through these things. But I think there is no other technical reasons. I mean, though, as I told you, you know, on the module side, yes, there's high power, but in terms of the efficiency, with the 2 years time, the P monopark will continue, and there is not much difference on that. You know, I mean, there is no innovations on this side, you know, except that, you know, as I told you, the trackers, but which is already people are doing the pilot plant, but it's fine, you know. But everybody has taken into the another account, you know, is that, you know, after coming the BCD, there will be a chance, like, you know, this is a window of opportunity that the module price may go down 16 to 17 cents, you know. But in that case, as I told you, you know, the IRR, which was expecting to 4 to 5% may increase. But those are a chance, you know. I mean, so I'll say it's a kind of a gambling, you know. I mean, a little bit on that, you know. Like, thank you.
Sure. This is not from the audience, but from me. So are we all saying that, you know, these prices are here to stay, or it's likely that we will see further downward trend in the prices, given that we are expecting the financing playing a key role and technology playing a key role, which is gonna further improve generation in the coming months, I would say, because things are so dynamic. I don't think so we will have to wait for years, but I think few months we might see improvements happening. Or are there, you know, these moving pieces on duties which are likely to negatively impact prices, and we might see increase because of imposition of all these duties? Or other factors which we rightly just discussed, you know, various other factors, and there will be an improvement there, so we will see a downward trend only? Or there could be uncertainties which may lead to high prices, because discoms are now more comfortable with these low prices. Any higher prices, they might not be comfortable any longer, because this is the benchmark now for the discoms. So yeah, I would want to hear from everybody, maybe just a very quick comment, how do they feel the prices going forward? Anybody can start.
Yeah, let me start then. Vibhuti, if you see, every time we used to say this, okay, there was like 4.5, then there was like 2.97, then there was 2.44, and there is 2.2 now. Every time we used to say, now it has hit the rock bottom, and then but the new tariffs getting discovered every time. But this time we really feel, I think the majority of the market really feels that it has reached the rock bottom, or maybe very few juice left to squeeze. Okay, And this is mainly because now if you see uh, all the assumptions are neck to neck. Okay, if there is one, let us say land. Okay, so land they do not have any layout now. They do not. They have just seen the land. Okay, so they do not have any contour of that land. They do not know what the soil strata is going to be. So any minor deviation from that change, if there is going to be a hard rock present, like Badla, though it is Rajasthan, so Badla we find limestone kind of rock below the soil strata. Or if the layout is not rectangular, if it is going to be some amoeba shape kind of thing, so then this is going to impact them. Okay, because we do not know during the land acquisition, at least till 80-90% is done, you do not know the exact shape of the layout. So this is going to impact. Likewise, all the other factors, let it be a transmission line or the land cost, so everything is taken on a optimistic call, forward call. And even on the module prices and then the exchange rate which we are talking, so anything could go wrong. Okay, so if there is there are no breathing space available, so then there should be definitely, if you see even the auctions, last two auctions, so there are only 5-6 players rolling down the tariff beyond certain rate, like be 2.1 or 2.2 rupees. After that, you see 3-4 players only rolling down the tariff. So rest of the market stays there. And so there is a reason for staying there. One is like, obviously there is a difference that you see from the tender to tender things. Like there is a SECI, ISTS and GUNL. If you take care, again we see there is a slight generation disadvantage in Gujarat, and the land cost is on a higher side in Gujarat. And even you cannot put up like a single plant of a 300 megawatt what you put up in Rajasthan, so you cannot put up a single plant in Gujarat. It is like, it has to be like 100 megawatt or 150 megawatt capacity. So then that impacts the BOS cost. So if you're splitting the capacity into to 3 locations, but still we saw there the tariffs matching the same as Rajasthan. So that's why I see there is a little juice left, but that's not very high to take care of all these uncertainties. So it has to get corrected. It will be in a slightly upper trend. Definitely, it's not going to be 2.5 again, but it should settle somewhere around 2.2, 2.3.
Mr. Goutam, can you answer on the future tariff trends? And I also want to add one more, Vibhuti, sorry to budge in here. What is the module price expectation in after maybe 2022, early 2022? Some number on that we would want from you.
Okay, if you look at the polysilicon cost, as a 6 months back, it was something like $7 a kilo. And then the wafer price, so G on wafer 158.75, was something like 30 cents. And then the cell price was something like 10 cents, and the module price was just below 20, around in between 18 to 90 with this, the P-part modules, But because of the shortage of the glass, as you see, if you do the Bloomberg list, in Q2, it was like 122 gigawatt. If you look at the Q4, 188 gigawatt, so such a huge expansion is going on. So what is there? Now, there's one more incident happened, in between in July, GCL factory, polysilicon factory got fired. Before that, DACO factory, so which was catching almost 10% GCL and 12%. So today, the polysilicon cost has already increased. It is almost like $9. And the wafer price has also increased something like, 40 cent, and then cell price above 12. The module price is 21.5, but there are several other reasons on that. One is the glass is something like, earlier it was $3 per square meter, and then the EVA was about less than $1 per square meter. There's a EVA price also increased, but the logistic cost has been increased by Earlier, it's almost like a per dollar per watt is almost like a 0.2 to 0.25 cents. Now it is more than 1 cent, at least 4 times more. If you add all these things, so today this is the price. But way forward, after maybe 1.5 or 2 years, I'll believe that it will be going down to somewhere 16 to 70 cents. The reason on that, the BCD, I know there is a huge production, almost not 188, will touch 200 gigawatt in China. And as you understand, that in India, 450 gigawatt is a target for RE, but solar, if you take into the account, like 300 gigawatt. So on a year-on-year basis, if you see from 2021 onwards, so 2021 something like the 18 gigawatts, maybe 22 it will be 22 gigawatt, and way forward it may be 25 gigawatt. So in that case, so China will not leave the Indian market. They'll play all kind of strategy, though we are taking into account like Indian manufacturing to bring the whole value chain, but that will take some time. They will take that window of opportunity. So I believe, the numbers will be on that, 16 to 70 cents on the module. Obviously, the P park, I'm not saying that it will be, but there will be some module price will be coming with a new technology, the N type, in park, because that will be a given advantage in terms of the degradations. The first year degradations, which is 2%, which is much lesser than 0.5%. But that will be initially the product will be slightly on the higher cost, but on a year-on basis there will be low degradations like 0.2 to 0.3% a year. So there are a lot of new technology trend will be coming, and one more thing which may come, after P Park is that TOPCon, not AGT. AGT will take a little time, So I believe that
16 to 17 is a good benchmark, I think.
I think that that is my number. It's not anybody's number,
right,
but
right.
I have
Yes, your personal
analysis
opinion.
on the value chains, right from the polysilicon to the the modules. So I know the conversion cost what is that. Thank you.
Right. Lakshmi, to you now, do you think the tariffs are going to stabilize, or do you think they are going to get aggressive?
My personal view is it will still get aggressive. I understand what Sathish was pointing out too, but I don't think, people would play so naked in terms of those aspects. Probably they would have certain cushion on that. But yeah, as he's rightly said, people might not have a wide window for that. The window would be restricted to, probably a few cents here and there. But yes, tariffs, because NTPC is one whose appetite is not going to get quenched by, probably a 500 or a 200. They have enough cash with them for at least the entire, I would say probably at least they can take 30% market share of the entire renewable energy sector. So if somebody is going to come bang on for a 30% market share, they are going to drive down the tariff, because they cannot wait for a capital to be deployed. They're going to go really aggressive. And obviously in Aditya Birla, who was a surprise element, and even Torrent Power to that extent. Torrent has not behaved in such a fashion in any of the past tenders. You obviously see 1 or 2 players in each tenders, and in fact even we showed a different behavior from how it was in our Rajasthan versus Gujarat. Right, there'll be obviously bidders who would like to roll down the tariff, and at least from the historical perspective and the forward market view, tariffs are going to fall, and that's what discoms would like to see. And I don't see an uptrend in tariff, and certainly that will be discouraging for the industry, because you will then be sitting on piled up unsigned PPAs, which is what people don't want to look now. So I think it might be stabilized for some time, and then probably you will see again a rollover, a downward roll, and then it's going to continue like that. And I'm pretty sure that's how it has happened across the globe. So India will not be a out of the box thing. So I think we are going to see the tariffs going down, and there are several factors to it. Probably one has to see whether all the factors work out or it's going to go against.
Right, Lakshmi, I absolutely agree on your NTPC point. And see, there are too many questions I want to stop, but there is one more thing that I want to ask you, Lakshmi, to conclude it. Do you think there will be an impact on the earlier auction tenders by SECI at higher tariffs? Do you think that is going to face further delays, or do you think that's just a temporary thing?
See, certainly there will be an impact. I'm not. I won't be. I won't be little conservative or probably aggressive in saying that there will not be any impact on all that. Certainly, there is going to be impact. Discoms are choosy in terms of tariff, and that's the right approach, I would say, because at the end of the day, they are supplying power to an end consumer like us, and the vision of the government is to deliver low tariff to people. So obviously, discoms. I mean, again, we all know the state of discoms. They are bleeding. So ultimately, they would like to, probably see a low tariff, and that's so they can justify even to their electricity regulatory commissions, right? So they could eventually look at low tariffs, but I think there is also a timing effect to all these things, right? That's where the discoms are not differentiating a 236 or a 2 rupee tariff, because the time frame with which these projects are going to come are going to be little different. There is a time gap between these two projects coming online, and the dynamics of these two projects are certainly different, right? I mean, 236 an ISTS project which was at 2 rupees Rajasthan has a totally different dynamics, because Rajasthan offered certain scopes in terms of the RREDF charges, and even yes, the ISTS waiver risks and other things. So it's not a like-to-like comparison. So discoms have, I think, I am just hoping that they will try to understand this and probably the earlier PPAs get signed. But yes, certainly I'm not shying away from the fact that there is going to be a delay.
Great, thank you. Mudit, the last concluding remarks from you now. What do you think tariffs are going to be next few years? And
look, there are three different scenarios. The tariffs are going to go down. There is no doubts on the technology being evolving front. So as I was saying earlier, we will keep getting justified, let's say 3 out of 4 times of all the tenders will get justified. So yes, tariffs would likely fall, but I would say history would repeat here again, in which the tariffs once have a quantum fall would stabilize for a few months time, and the situation, all the developers just understand, okay, this is the new number, not a new normal, and then after that the new fall will begin. So I would agree with Lakshmi's earlier remark that this is now the number set for the discounts, and this is the anchor tariff now, around which the bidding will follow for in the short run. But in the long run, yes, of course, the tariff has to fall. NTPC has already got the approval of 32 gigawatt of solar by 2032. So they already have lined up their board approvals as well as shareholders remarks, and they have raised or rather put in the process of raising the money. So they are going to be a very significant player. I don't see the tariffs rising for the good of takers like SECI, NTPC, NHPC or GVNL going forward. So this is likely continue and go for, and based on the forward curve, it would likely fall.
thank you.
And what that new number would be, would we still see only solar as a specific tender alone, or would we move to solar plus battery storage? All these things are now on the anvil of how the situation would evolve in India.
Thank you, Mudit. There are a lot of other interesting questions from our attendees, but I think Vibhuti, we have to close the session now. It's already 20 minutes past this, but I could see that participants are, we are able to maintain that interest, and I thoroughly enjoyed this conversation. It was a very interesting discussion. Thank you so much to all our panelists who are so open in sharing their views, and I think we are able to answer a lot of, reasons behind what is behind this, aggressive tariff trend. Thank you very much for everyone for joining us on this panel today. Thank you to all the attendees to be part of this session. The recording of the session will be available shortly on our website. And if you have any questions that are left unanswered, you can share them with us at contact@jmkresearch.com, and we will try to address them. Thank you, everyone. Thank you.
Okay, thank you, Jyoti, and thank you, everyone.
Thank you. Thank you.
Okay, thank you.